How can QCDs lower taxes in retirement? Hi, I am Mike Heatwall, founder and CEO of the Dollar Group, a wealth management firm focused on helping retirees. Now, if you are someone who supports a nonprofit, ties to a church, or gives money to other charities that you care about, you need to know about Qualified Charitable Distributions, or QCDs. This is one of the most tax-efficient ways to give to charity in retirement, and it's a strategy we often use with our clients. Let me first start by explaining how it works, and then provide a few examples. So, what is a QCD? A Qualified Charitable Distribution is a way to give directly from your traditional IRA to a qualified 501c3 charity without counting that money as taxable income. You can give up to $108,000 per person per year, and it's available starting at age 70 and a half. The amount increases annually based on inflation. And if you already take required minimum distributions, a QCD can count towards your RMD while reducing your adjusted gross income. That means potentially lower federal income taxes, lower state income taxes if your state taxes retirement income, reduced taxation of Social Security, and possibly avoiding Medicare IRMA surcharges. So, what are the key rules to follow? To qualify as a true QCD, there are a few important rules. First, the funds must go directly from your IRA custodian to the charity. You cannot receive the money first. Additionally, the charity must be a qualified 501c3. Donor-advised funds and private foundations don't count. Next, you must be at least 70 and a half on the date of the donation, not just the calendar year. Lastly, you will need to get a written acknowledgment from the charity for your tax records. Now, let's look at an example of how a QCD can be used to give tax efficiently to a charity. Let's say you are 73 and have to take a $40,000 RMD, but you already give $10,000 a year to your church. Instead of taking a withdrawal of $40,000 and then writing a check to the charity, you could instead take a $30,000 distribution and send a $10,000 QCD from your IRA. That $10,000 counts towards your RMD, but doesn't show up in your taxable income. That one move could save you $2,000 to $3,000 in federal and state income taxes. It may help keep you below the Medicare IRMA threshold, which can result in higher Medicare premiums. And it could potentially reduce your tax on Social Security as well. Now, let's look at another example of how a QCD can be used for someone who wants to give a portion of their estate to charity at the end of their life. Let's imagine a retired, married couple have a combined IRA balance of $1.5 million. They also have other assets of $1.5 million in a taxable trust and $700,000 in Roth accounts. Their goal is to leave 20% of the estate to charity and 80% to their children. They're currently giving $25,000 per year to a hospital foundation and their church. Their estate plan does include leaving 20% of their assets to charity. Their attorney originally planned for the charitable gifts to come from their trust, both during their lifetime and at death. But with additional planning, we restructured the plan to use QCDs annually during their lifetime. We changed their IRA beneficiary designations to charitable organizations, and worked with the attorney to list only the children as beneficiaries in the trust and Roth IRA accounts. So, what are the benefits of doing all of this? We reduced their IRA balances via QCDs, satisfying a portion of their RMDs for this year. We ensured their heirs inherited Roth and trust assets, not pre-tax dollars. Now, this is important because the Roth IRA dollars are tax-free to the children, and the trust gets a step up in cost basis, thereby making those dollars essentially tax-free as well. We created income tax-free gifts to the charities both during life and at death. And finally, we aligned lifetime giving with their estate legacy. As you can see, QCDs are not just for income planning. They can be a powerful tool to coordinate lifetime giving with smart estate planning and legacy goals. If you're charitably inclined and want to explore how QCDs can reduce your tax bill while supporting causes you care about, we would love to help. If you found this information helpful, please give us a thumbs up and subscribe for more financial insights. Thanks for watching, and we'll see you next time. Once again, I'm Mike Heatwall, founder and CEO of the Dalla Group. If you are interested in seeing how we help our clients, visit us at www.thedallagroup.com. Give us a call or schedule a time to connect with one of our wealth advisors. We would love to hear from you.